So I've just bought 4 stocks for my personal portfolio this month, and today I review their names and explain why I bought them. These 4 stocks are small caps, actually micro caps, so pretty tiny companies, and they belong to a wide range of sectors. The first one is a copper stock, and the others are technology companies involved in healthcare, mining, and privacy respectively. But okay, let's start with the largest company of my list in terms of market cap. So the first stock I bought in July is called Oracle Resources. It is listed both in Canada and the US under OCO and ORRCF respectively, and my average price stands at around 30 cents as you can see here. Now, what does this company do? So in short, as I mentioned, Oracle is a copper stock. But you see, unlike what many people might think, Oracle is not a copper miner. It is not a mining company. Yes, it's true this company, Oracle, owns a huge copper deposit in Mexico, which is the Santo Tomas project. However, Oracle's plan is not to mine this copper by itself. No. Instead, Oracle only wants to confirm the copper reserves in its property in Santo Tomas, so it can then sell it to a major mining company. So, that's the plan. So that's pretty much what this company, Oracle, is about. They want to confirm the reserves so they can pass the project forward, so they can sell it. But okay, now in a few words. After all, why did I decide to invest here in Oracle? What's my rationale, right? So I decided to go long here because, well, while Oracle's market cap stands at only 90 million US dollars, their reserves are estimated to be worth $1.5 billion, as we can see here. And that's already after taxes, okay? So that's pretty much why I decided to increase my position here last week, because I'm buying a $1.5 billion asset for less than 100 million. Seems like a pretty good deal, right? But you see, it actually gets better, much better. And I say that because this valuation, this study I just showed you, was done using a copper price of $4, while copper is already trading above $6 today. In other words, that means that Oracle Santo Tomas project is actually worth much more than just 1.5 billion. So that's why I decided to go long here, because Oracle Resources is the definition of what undervalued asset means. Now, where do I think this stock could go, right? So I believe this stock could be a serious multi-bagger investment, honestly. I mean, let's be conservative here, right? So let's say Oracle's reserves are worth only 1.5 billion, okay? We already know Oracle's project is probably worth much more than that, since copper is already trading above $6, right? But let's always be conservative. So let's say Oracle's project is still worth only 1.5 billion as the study indicated, okay? Now, could Oracle sell this project for 30% of that? Honestly, I don't think so. Now, 30% of 1.5 billion, 450 million, right? So that's what shareholders would receive in this case, 450 million, which would represent already 5 times the current market cap, okay? The current levels. And let's recall, we were being conservative, okay? So that's the kind of upside we could have here. Now, if copper prices continue going up, which I believe is going to be the case, since copper is pretty much the metal of the future, right? But if copper prices continue to go up, and if Oracle manages to sell this property for more than 30% of NPV, that means the returns here could be much, much bigger, okay? Maybe we could be talking here about a 10x investment, maybe more, I don't know. So yeah, that's why I went long here in Oracle, because in my view, as I said, this company, this stock, is the definition of what undervalued asset means. Now, the second stock I bought in July was a healthcare technology company. And here's the problem this company is helping to solve. You see, heart attacks are still the #1 cause of death in the world. And one of the main reasons for that is that many patients simply don't seek medical help in time. What happens is that, because it's easy to mistake the symptoms of a heart attack for something less serious, many people end up ignoring them and deciding to stay home until it's too late. And that's the problem this company is helping to solve. But how, right? So before I explain you that, let's already review this company's name. So, Our second stock is called Heartbeam, and it is listed on the Nasdaq, ticker BEAT. My average price here stands at around $1, and I have just increased my position last week, buying more shares at 73 cents. But okay, now, how is Heartbeam helping to solve this major health problem of detecting heart attacks early? So, for that, Heartbeam has developed a 100% portable device that is the size of a credit card and capable of assessing your heart with the accuracy of a 12-lead ECG, electrocardiogram. Now, why is that important? Because, well, that's the gold standard for detecting heart attacks, a 12-lead electrocardiogram, a 12-lead ECG. The problem is that usually one can only find such devices at the hospital. And here's where Heartbeam enters our story, because Heartbeam's device is changing that. After all, as I mentioned, their device is 100% portable, right? Which means that now you will pretty much be able to have a hospital-grade machine at home with you, which in turn means fewer people will die from heart attacks because they didn't understand what they were experiencing and didn't go to the hospital in time. And well, that's also great news, right? So yeah, Heartbeam has indeed developed an amazing technology. Their device is the only one in the world 100% portable, with no cables, and equivalent to a 12-lead ECG, to a hospital-grade machine. And you see, it's not just the company saying that. Heartbeam, for example, has already received the FDA's approval for arrhythmia detection, and the company is now looking to expand its indications. For example, they are now going after the indication for ischemia detection and for heart attack detection as well. Actually, to work on that, on the indication for heart attack detection, has become one of the company's main goals now, as they explained us in one of their recent press releases. After all, this indication would open a massive market. So that's what Heartbeam is about. With that said, it's important to note here that Heartbeam is still a pre-revenue company, okay? However, it has already entered its commercial phase. Heartbeam has just signed its first clients, so we should soon see their first dollars in revenue coming in. I don't think it will take much longer. So that's Heartbeam. Now, why am I invested here? And where do I think this stock could go, right? So I'm invested here because I think this company has developed a very unique device. And I think we are going to see a massive demand for it. Besides, I also believe that this stock is very cheap. For example, as we can see here, Heartbeam is trading at a market cap of only $40 million. Honestly, for me, the value of their technology alone should already cover that. Now, where do I think this stock could go, right? You see, I actually don't have an exact number in mind, but I believe Heartbeam could, for example, be a $500 million company, easily. If they deliver, I think we could get there. Actually, if the company indeed delivers, I think Heartbeam could be a $1 billion company. No kidding. If they can get the FDA's approval for heart attack detection, I think that's possible. Really. But okay, let's talk about upside potential. But for example, as we can see here, their total addressable market stands at $40 billion. $40 billion. However, here's where the company is starting, in the structured direct pay healthcare segment, which in turn represents a $4 billion opportunity. Now, let's say Heartbeam's device captures only 5% of that, that is, $200 million. Well, considering a multiple of 5 times revenue, that would already take this company to a $1 billion market cap, right? So yeah, Heartbeam could have a lot of upside, and this investment could indeed be a multibagger. So that was our second stock today, Heartbeam. Now, the third stock I bought in July is also a technology company, as I mentioned before, which in turn is helping to solve a major issue in the commodity sector. You see, the commodities industry is still very old school, and many companies still operate using mainly Excel sheets and emails, which naturally creates a lot of inefficiencies, right? It's no wonder the commodity space has been hit by so many big frauds over the past few years. So the truth is that this industry needs to urgently digitize. That's it. And that's the problem today's company is helping to solve. But how? So this company is offering the commodities industry a SaaS solution, a platform that allows companies to streamline their entire operation. Basically, what this software allows you to do is to visualize and track your entire supply chain from mine to market, making everything much more efficient and safer. So in summary, in very few words, that's what this platform does. And you see, though this company is still a microcap, though it is still a small name, it has already signed huge clients such as Southwire, Sumitomo Corporation, and Codelco, which, let's recall, is the biggest copper producer in the world. Okay? Now, enough with mystery. What's the name of this company after all? So our third company is called MineHub. It has a market cap of about $35 million and is listed both in Canada and the US under MAGB and MAGBF respectively. And you see, I believe this company will be very successful, even though it is still posting very little revenue and operating at a loss. Now, why do I say that? Why do I believe that? Because I think many more paying clients are about to arrive. For example, as you can see here, MineHub already has about 240 companies in its ecosystem. The thing is that most of them are only demo accounts, just companies testing the platform. And of course, these demo accounts don't generate any revenue for MineHub. But what I think will happen is that more and more companies will start getting converted into paying accounts, into paying clients. And why do I believe that? Because the number of paying clients is already going up fast. I mean, if at the end of 2025, MineHub had only about 11 paying customers, now they are at 28. And according to CEO herself, in this interview here I did with her, we could see up to 80%, 90% of these demo accounts being converted into paying customers. For her, it's not a matter of if, but when. In any case, let's say only 30% of the companies currently testing the platform do indeed get converted, okay? As always, let's be conservative. Well, in that case, we would already be talking about 70 paying clients in total. And well, with that, if that happened, I believe MineHub would grow a lot and start posting positive numbers. So that's why I think MineHub will succeed, even though its numbers are still in the red. But okay, now let's talk about valuation and also about where I think the stock could go. So as we've seen, MineHub currently has a market cap of about $35 million, while its revenue stands at just $1.5 million. Now, could MineHub get to $20 million in revenue over the long run? I certainly think so. Well, using a 5x multiple, we get to a market cap of $100 million, right? Which is around 2.8 times the current levels. And again, that's being conservative. That's considering only 20 million in revenue, okay? And here, let's recall that their total addressable market today stands at 1.3 billion, as the company showed us here in this investor presentation. So in other words, I don't think projecting 20 million in revenue is aggressive in this case at all, right? So yeah, MineHub could indeed be a multi-bagger stock over the long run. And that's why I'm invested here, right? Because I believe they will be successful at converting demo accounts into paying customers, that their revenue will grow, and that in the end, their stock will appreciate because of that, because of the business success. So that was our third name today, MineHub, ticker MAGB. And now finally, the last stock I bought in July is a technology company focused on the online privacy segment. And here's where this company fits in. You see, privacy laws are spreading across the US, in case you haven't noticed it yet. It started in California, and now 24 US states already have approved privacy laws. And these laws establish that first, companies now cannot collect your private data anymore without your explicit consent, so that's the first thing. These laws establish that companies now need to ask you explicitly to collect your data, they need your permission. And additionally, these laws also give consumers the right, for example, to request their data to be edited or completely deleted. And if you think it's okay not to follow these rules, well, the fines can be pretty heavy, okay? But anyway, so that means privacy-compliant data is becoming increasingly crucial for companies to operate. However, that creates a big problem, which is where to find this new commodity, privacy-compliant data at scale, right? So here's where Reclaim comes in. Reclaim is the answer for that question, because Reclaim is a company that operates as a marketplace of privacy-compliant data. On one side, you have sellers of private data, which are consumers, internet users like you and me, and on the other side, you have buyers of compliant data, which are all kinds of companies that need privacy-compliant data to operate. And you see, one thing I really like about this business is that it creates a very strong network effect, because the more buyers come to the platform, the more sellers get attracted and vice versa. So that's the first thing about Reclaim. In Reclaim, you can scan the internet for your private data, discover what's floating out there, and choose whether you want to monetize it or if, on the other hand, you want to keep it completely private, taking your private data completely out of circulation. So that's what this company Reclaim is about. Now, why am I invested here, right? So first, because I like the business model, and also because I believe the demand for privacy-compliant data will explode, which will likely help Reclaim to grow a lot. Secondly, even though this company is still small, it is already posting excellent numbers. Revenue is growing rapidly, they are already profitable, almost zero leverage, and the CEO owns 35% of the business. So these are the first two factors. And finally, I'm long here because I also think Reclaim stock is very cheap, and that the upside potential here could be huge. For example, as you can see here, Reclaim's market cap stands at only $7 million today, while the company is delivering $4 million in revenue. In other words, Reclaim is trading at around 1.8, 1.9 times sales. Well, for a company with excellent margins, with a very high insider ownership, and exposed to a sector that should only grow in the future, well, what can I say, right? I'm in. I think that's a very reasonable multiple to pay for this business. It certainly could be cheaper, right? But it isn't. But I really think we could see a lot of upside here. For example, I can easily see this company trading at 10 times sales once growth really kicks in and once the market finally wakes up to this company, to Reclaim. But okay, after all, what's the potential here, right? Well, honestly, I believe Reclaim has a massive upside. And as always, nothing in this video is investment advice, okay? But yeah, I believe Reclaim is another multi-bagger play. I mean, think about it. Reclaim's revenue is still very small. However, I can see it doubling over the next 2 years. But I think that, for example, Reclaim could deliver $10 million in revenue in the future, easily. Now, if you put a 5 times multiple on that, you will get to a market cap of $50 million. Well, from current levels, that would be a 7x play, a 7x investment. And again, I was being conservative. So, well, that's why I'm invested here on Reclaim. Actually, Reclaim is one of my main positions, one of my biggest positions. And well, that was our final stock. That's it for today, and see you next time.